White House economic advisor Larry Kudlow said there's a good possibility that a deal can be made between the US and China over trade. However, he warned that certain conditions have to be met. US President Trump and Chinese President Xi will meet over dinner this Saturday in Buenos Aires after the G20 summit. Joining me now from Shanghai is Brock Silvers, Managing Director at Kuayuan Capital. Brock, thanks for joining us. So, what are you expecting from the meeting between the two presidents this weekend? What are the chances of a ceasefire?
Well, despite the optimism for Mr. Kudlow, I think that's probably a long shot. And I think we've been seeing clues for weeks now not to expect very much from the G20 meeting in terms of trade. Really, we can go back 2 weeks ago to Shanghai, where we saw the CIIE, the China International Import Expo, which was designed to show the world what a potent importer of Western goods China was prepared to be. And many analysts took that as a positive sign that we were making progress in the trade discussions, but I took it as a sign that the two sides really had mismatched views on what the problem is. U.S. concerns really focus in a primary way on technology, forced transfer, IP protection, government subsidy to Chinese tech giants. Secondary concerns relate to more direct trade, tariff levels, import levels, etc. What we saw at the expo was China trying to solve a primary problem by making concessions on a secondary issue.
This week, President Trump told the Wall Street Journal that he could impose extra tariffs of $267 billion on China if no deal is reached. So what are your thoughts on those comments?
Well, he certainly could, and I don't think that's a bluff. I think it's certainly under consideration. But remember, even if that doesn't happen, existing tariffs automatically go up from 10 to 25% in January. It makes for a gloomy scenario, and I don't think the two sides are really looking at the problem in the same way. And if we can't agree on the problem, we almost certainly can't agree on a solution.
So we saw extra pressure on Apple's share price this week after Trump said that a 10% tariff could be placed on iPhones made in China. Do you think the trade tensions look set to be another major headwind for the tech sector?
I think it will have an impact on the tech sector, but it will be significantly more difficult on the Chinese tech sector. We just had a bunch of very unpleasant corporate results in China from the tech sector. We had Trump going after Huawei. We saw a tech sector mini meltdown in China versus in the U.S. We saw Apple shed some market cap because of some temporary dislocation possibilities. So this will impact tech globally, but much more so in China than the U.S.
So when we think about the trade war more broadly, how much of a dampening effect do you think that it could have on the US as well as China, and then on the pace of global growth as we go into next year?
Well, I think it'll have some impact in the U.S., but I think the U.S. is very well positioned to win this individual battle over trade with China. In China, it's going to have a significant effect. And remember, in short order, we will have a G20 that I think will result in no significant agreement. That'll knock the market. We, more likely than not, will see a Fed rate hike in December that will knock the market. And then in January, we have some automatic tariff increases, which will really hurt the market. So the macro environment in China is not very good right now.
And when it comes to commodities, how do you see the trade tensions impacting the base metals complex? We've already seen a lot of pressure on the downside since the peak in prices in April.
Right. Well, China has really been one of the primary drivers for base metals for several years. But the real question isn't how the trade war will affect the base metals markets, but how a softening Chinese economy as a whole will affect those markets. And the Chinese economy now has issues that extend well beyond trade. What I would say is 2019 looks like it will be a difficult year for China. The slowdown should continue, and that means continuing softness for base metals.
That was Brock Silvers, Managing Director at Kuayuan Capital. I'm Victoria Scholar. Thanks for watching IG, and we'll see you very soon.